Welcome back, and you're watching Commodity Champions. Chris is here with us. Chris, I want to really start on with the currency space, because all the impact that we see in commodities does come in from the currency play as well. And with the US doing what it has been, it has impacted the US dollar vis-a-vis other currencies. How have you seen that aspect of the trade?
Yes, and if you look back to especially 2017 as well, the dollar was broadly weakening across both G10 and EM currencies, and it's definitely proved a supportive element for not just oil but the broader commodity space in general. This year, commodity and FX and more broadly equity markets have kind of been wrapped up in a similar trade. So correlations between commodities and other risk assets such as the S&P or the dollar have actually been quite high as well. And broadly as a house, where we remain I'd say bearish the dollar. We still see the potential for further weakness to come against kind of a broad basket of currencies even. So I think that's going to prove a supportive factor through 2018 at least for the broad commodity space. Not to the magnitude that we've seen up to this point, but it kind of is another thing that lends supportive for the whole of the dollar-denominated commodity space.
Chris, before we took a break, we were talking about the metal space with you as well. Anything in particular that comes to your mind in all of those metals where you see a faster bullish move perhaps returning? Aluminium, of course, has done its 15% up this week. Do you see further gains there? Do you think zinc will come back, because that has been the worst performer in this week?
Yeah, there's potential. I would say the way we view metals at the moment is that, especially from a macro theme as well, when you get into the late stage of economic cycles, metals tend to perform extremely well, especially relative to energy and also relative to other risk assets like equities as well. And it generally is because at this stage in the economic cycle, the kind of spot demand tends to be pretty strong, and you kind of seen that come through with physical differentials for metals prices remaining quite strong. So I'd say we're broadly supportive or broadly constructive even on the metal space, and I think aluminium is probably remains the area that we're most convicted in.
Chris, also, how do you look at the precious metal space? Because clearly gold hasn't performed the way it should have, the way the global geopolitical concerns or the weakness in US dollar, for that matter, has been a theme in the previous year and this year as well. What is your sense? Because while the ETF buying in China and US seems to be picking up, it is still not reflecting in the kind of levels that we are in sense of gold.
Yeah, I'd say that we remain kind of slightly constructive on gold still. It's the combination of one, the dollar view as a house, two, that these geopolitical flashpoints have proved supportive for gold, at least in very short-term pricing, and yeah, any potential that you could see on a deferral of rate hikes could prove supportive as well. So I'd say it's not screamingly bullish, but we're kind of neutral to bullish on gold through the course of this year.
David, what is your sense on the gold prices? Where do you see that headed? Because while we were able to cross above that 1350, even did a $1370 per ounce on gold. Are you buying at these levels? Are you looking at a 1400 coming in sooner than what the markets were expecting earlier?
Yeah, look, gold has really been quite strange. If you have a look at the geopolitical events that we have seen encompassing the globe at the moment, you would have thought that safe haven was going to be the one place that investors would be very keen to be looking for in this sort of environment. We have seen, yes, the gold price react with let's say, a fairly subdued rally in terms of the price at the moment, but it's certainly not been driven by what we would have thought those safe haven characteristics would have been telling us. We think then that the gold price, and as we've said many times before, the gold price continues to be driven by that US dollar. And the strange thing is, when we saw the sanctions coming into play, when we saw the geopolitical events coming into play, people started turning back towards the US dollar, and we did see a stronger US dollar, and unfortunately that's just kept in check any gold price. From here, we continue to believe that the gold price over the course of 2018 will be certainly probably more supportive of gold, i.e. we expect it to go lower, but we are looking for the inflation spectre to hit its straps come late 2018 on the back of the very geopolitical events we've been talking about, i.e. high tariffs. We expect inflation to come into the system, and that should drive the gold prices higher later in this year.
All right. Chris, I want to come to you for a concluding comment before we end this show. What would you want to watch out for now if somebody had to take a quarter-wise position in sense of commodities? What are those fundamentals? Where do you see perhaps a best bet coming in sense of sector when you look at commodities?
Yeah, I think going into a kind of 2Q and into 3Q, a broad basket of metals is a good exposure to have. And then in addition, in the energy space, outright crude is there's good seasonal elements to it, but in particular something such as distillate that will benefit that's benefiting from a similar demand side pull than the metal space, and you also get that additional seasonal element to it as well. So I'd say they're the two kind of key areas that we're looking at now.
And what kind of a percentage gain or movement would you expect then in case of crude?
I'd say it's difficult to put an outright number on it, but especially given the momentum that we have now and the potential risks we have coming up in May with Iran, with Venezuela, with everything that's unfolding with Syria, then there's definitely a good few dollars more than we can see than where we're currently trading on the spot that we could edge up higher. There's still money on the sidelines, I think, that can come into this market.
All right. On that very bullish note, gentlemen, thank you so much for joining us. Chris and David, we'll let you go at that. And that's all the time that we have on this edition of Commodity Champions. Thank you for watching.